Welcome back to CryptosRUs. I am George. We're all George. So tonight, it's part 2 of this Michael Saylor interview, and I promise you, I'm going to show you things that you haven't heard of before. Honestly, this is such a good interview. I posted the entire interview, the link in the description, so check it out yourself. But there's 2 things I want to show you. Number 1 is he talks about 4 types of crypto and why he chooses Bitcoin. Now, you may be thinking that you've heard of this before, but he actually gives a slight twist. He actually answers it a little bit different than you would expect. He actually tells you, depending on what kind of income you have or how much money you have, you should actually invest different ways, which is really, really interesting. I haven't heard him break it down like this before. And also, another really interesting question that was posed to him, and that is why we don't see more public traded companies buying Bitcoin, right? So let's talk about these 2 things. Let's listen together, and let me respond to him. All right, thanks for tuning in. As always, smash the like, subscribe to the channel. 2 streams every day, 11:30 and 8:30 p.m. Central Standard Time. So make sure you follow me on Twitter, Facebook, Instagram, and CryptosRUs.com. All right, guys, let's do this. Welcome, welcome, welcome. I know some of you guys still feeling uneasy. You know, that is why it's a perfect time to listen to the smooth voice and rationale from Michael Saylor, who is the ultimate Bitcoin bull at this point. We have a lot of bulls to look up to, but Michael Saylor, newcomer to the space, really proving his faith in Bitcoin, and he explains it why. He explains it why so many times, but now I've noticed within his interviews, he's loosening up a little bit. Before, everything was structured Bitcoin, 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 which he is still all in on Bitcoin, and he still only invests in Bitcoin. But he has loosened up his stance on other things. And this, let me show you this first part where he was asked about Ethereum and others in this space, and he breaks down the 4 different kind of crypto out there, right? Why he chooses Bitcoin. And then also he talks about the income. That's the important thing. That's what makes this part more interesting than everything else, because he actually talks about depending on how much money you have, this is how you should actually invest. So let's look at it together. I think this is worth listening to if you guys haven't watched it already, which I'm hoping you guys haven't yet. All right, let's listen. All right, let me get the volume ready. All right, let's do this.
I wanted to segment the crypto world. A magic quadrant would be, you've got property, you've got currency, you've got platform, you've got application. The real world metaphor for that would be New York City. I give you $1 billion, Jamie, and you can buy $1 billion worth of land, like 6 blocks in New York City. I don't know what it would buy you today. It might not even buy you 1 block. It might not even buy you 1 block. Or you can buy $1 billion of a building, part of the Rockefeller Center. Or you can buy $1 billion of US dollars in a bank in New York City. Or you can invest in and buy $1 billion worth of companies in the buildings in New York. The companies are the applications. The $1 billion of US dollars is the currency. The building is the platform. The land is the property. Some people, if you have a lot of capital and you want to invest it for 100 years and you don't want to take you can't own the currency, right? You know that's going to debase. That's going to inflate and lose its value at 10% a year or more. So you don't do that. Do I want to own the building? Do I want to own the companies, or do I want to own the land? Companies come and go. The building will be around for 50 to 100 years. And the land will be around for 1,000 years. They're just different business propositions. If you don't have a lot of capital.
All right, so this is where he starts talking about like how much money you have. But in case you're confused on the 4 types, okay, you have Bitcoin being property, being like the Manhattan block. You have something like Ethereum, which is the building that's on top of the block. Then you have, say, dApps like Uniswap that's within the building. And then you have a bank that's on that block, which is stablecoins. Okay, so he's breaking down 4 different types. Now, this is where it gets interesting.
If you have no money, when I started out in business, Jamie, I had $5,000 in a furniture loan. I started a business and I invented something. If you want to go from $5,000 to $1 billion, you need to start a company. You're on the application side. If you have $50 million, you can take the 50 million, borrow 500 million from the bank and buy a building. And that's the platform side. If you have $500 million or $1 billion, you might just buy the land and, wait. One is a more capital intensive strategy. They might all work, but they're for different types of investors. Now, one last risk spectrum I'll give you.
All right, I'm going to stop right there. Michael does seem to be coughing a lot in this interview. I don't know why, but that's very interesting. Basically saying if you have no money or very little money and you're starting out and you want to make a whole bunch of money and you want to invest, you actually invest in the projects. The ones like Uniswap and the DEXs and DeFi projects. That's essentially what he's saying. If you have no money at all, right, and you want, then you would invest in one of those companies. Now, if you had a little bit more money and you wanted to invest, let's say, in the building or on the building itself or the building itself, then you would go with something more stable that is like Ethereum or Cardano or Solana or VeChain, one of these projects. The big caps, the ones that the companies are residing on, right? And if you had even more money than that, then basically you just go with something that you just really don't care about in terms of volatility day to day, something that's going to last for a very long time, and that is Bitcoin. So he actually breaks that down with a dollar amount. So I think that's kind of interesting. Let me continue on.
There are 4 types of investors. There are savers. Those are people that want to save money for 100 years and I want to give it to my grandchildren, or I want to endow a park to last forever. There are the investors. I want to invest in a company for 10 years. I'm going to buy Apple stock in 2010 and hold it for a decade because I think eventually people will like this iPhone thing. When you're an investor, you're betting on a portfolio of risk. You're taking risk. When you're a saver, you're converting weak assets to strong assets. I'm taking my dollars and I'm trading them for Bitcoin. I'm trading my bolivars in Venezuela for dollars. I'm trading my pesos for dollars and maybe my dollars. If I don't want to buy Bitcoin, I trade my dollars for land or my dollars for gold or my dollars for collectible artwork or trophies or sports teams. I'm creating something which will not be debased by currency expansion. So savers have a long time horizon. They're risk adverse. Investors have a mid-time horizon. They take some risk. A trader is trying to guess, they're managing a portfolio of risk derivatives, first and second derivative of risk. Will Apple beat their numbers this quarter? Will the 10-year interest rate move faster than the 30-year interest rate? Is there more demand for Bitcoin in Tokyo right now than there is in Singapore right now? Right? You're trying to get in between two things and you're arbitraging it because you're a trader. That's a shorter time preference. You have to have proprietary models, proprietary liquidity information, or a lifetime of interest, a lifetime of experience in that. And then the speculators, they're like, I went to Vegas, I bet on black, I won. I bet on Dogecoin because Elon Musk was going to go on Saturday Night Live. I thought it would go up. I thought it would go up between 3 p.m. and 5 p.m. on the day that he was going on. Maybe you can trade that, but maybe you're speculating that. If your MicroStrategy, our strategy is to acquire and hold Bitcoin. We're a property. All right,
I'm going to stop right there. So I think not only do you have 4 types of crypto, but you have 4 types of traders, which makes a whole lot of sense. Hey, if you want to get rich quick, you're a speculator, you're a retail investor that is just FOMOing in because, like he said, perfect example. If you think Dogecoins go pump tomorrow, right? You can FOMO in, and it's 50-50. It's like betting on black or red, though black and red is not 50-50. It's more like 48-48 because there's greens. But you get my picture. I mean, you could win or you could lose out big, right? Then you have the traders, which, of course, there's a lot of people that are trying to trade, listening to a lot of other people that are telling you what the charts are saying. You can add a whole lot of stress to your life by trying to figure out day to day what Bitcoin is going to do or altcoins and try to trade it that way. Or you could be an investor, and there's two ways to invest, right? You can invest in altcoins and simply hold them, or you can invest even longer in something like Bitcoin, right? Because Bitcoin is the one that's going to last the longest. So, I think that's simple, but I like hearing that because I think a lot of people, even myself, I think sometimes we group certain people into certain categories, and that's not true. There's a lot of different type of people. They get into crypto for different reasons, right? And I think, tribalism or people that's trying to protect their bags, they try to shame or talk down or bad about one group or another. Like traders will always say that holders are just, they're ridiculous. Why would you want to DCA when it's obvious it has to go down and so forth, right? And then holders also the same thing about traders. Like, hey, holding makes you more money in the end, so why would I want to trade? And then, you have the speculators that's getting into the meme coins, right? Like all sides is kind of like, kind of in a way attacking each other. But I guess people get into crypto for different reasons, right? People get in for different reasons. There are some that are looking to make money quick, and they're generally the ones that get hurt, the ones that get wrecked the fastest, and they leave the fastest. I believe that so many that came in at 60,000 plus for Bitcoin, they have all left now since Bitcoin is in the 30s. And the same thing, people that got in Ethereum at 4,000s have left. People that got in Doge in the 70s have left now that it's below 20, right? So a lot of speculators, I would say, got in, didn't understand what they were getting involved with. They got burned and they got out, right? Traders and holders, we're still here. Everyone's trying to figure out, I guess, what's the next move. But, for me, I agree with Michael. I rather have less stress, focus on the future. And I've been through a couple cycles, and I've seen this before. And I've seen Bitcoin go down, and everyone gets nasty. Everyone tries to call everyone out, right? Trying to blame everywhere else. But the ones that said, hey, I'm going to hold and DCA, they're the ones that came out the highest. They came out on top. And they're the ones that's laughing to the bank right now. So, that's the way I'm going to operate. That's the way I operate right now. And that's why I'm going to operate in the future. And hopefully you guys are joining me on that. Otherwise, you wouldn't be watching me on this channel. If you're looking for day-to-day trading, this is not the channel to be looking at. Now, something else I want to show you. Something else I promise you have not heard of before. And that is why public trade companies, or why more public trade companies, is not getting involved with Bitcoin. And this is the honest truth. And Michael Saylor answers it perfectly. It's not due to fear of regulation or anything like that. It's accounting. And I've heard of Tesla people say this to me because my good friend is a really hardcore Tesla bug. And he tells me that Tesla, the Bitcoin that they hold, they would have to report as a negative that they are in the loss, even if by the end of the quarter, Bitcoin is above where they bought it at. I'm like, that makes no sense at all. But there's this new type of accounting that was, I guess, just created for digital assets that didn't exist before, and this is how it works now. And this is a problem. So let me play it for you guys because this is good. This is really, really good, and he explains it really well.
Now, I did want to ask, what do you think, just talking about institutional adoption of Bitcoin, that's stopping a lot of
Publicly traded company that had this on their balance sheet. So this wasn't a priority for accounting profession and FASB. Today, there are billions and billions of dollars with publicly traded companies. But as long as you have indefinite and intangible accounting, that's opaque, optically suboptimal. What it means is I could buy $1 billion of Bitcoin. It would go up by a factor of 10. I'd have $10 billion worth of fair market value, but I would be showing it on my balance sheet as being worth 700 million with it and take a $300 million loss in the quarter. So you can see if you're a CFO or a treasurer and you pride yourself on an optically beautiful P&L and balance sheet, the volatility you're concerned about is not the volatility of the asset, it's the accounting volatility. And that comes because indefinite intangible accounting means you can mark it down. In fact, the way indefinite intangible accounting works is you buy something, baseball cards, and then you go to everybody on the street every minute of the day and you ask everybody if they'll buy those base cards, that baseball card collection from you at the same price as you bought it. And if anybody in the world at any point in time says they would pay less, then you have to mark the baseball card collection down and you can never mark it up again. So you're pretty much finding the most pessimistic bid in the world. And so that's the real liability for a CFO. The way to get around it is you'd have to buy it as a fund.
Real quick. So as far as I understand, I think it's a little bit different than what he just explained, Michael explained, but it's basically this, like that Tesla example. At any given time, if whatever price that Tesla bought Bitcoin at, let's say it was like 30,000, at any given time within that quarter, if Bitcoin drops below 30,000, let's say to 29,000, but then it suddenly comes back, and for the remaining of the quarter, Bitcoin stays above 30,000 and it's at 35, 40,000. But because of that one instance that Bitcoin dropped below, they have to mark it as a loss, even though at the end of the quarter, Bitcoin is higher than when they bought it. So that is, as far as I understand, how it works when you're taking into account Bitcoin and digital assets with accounting. So what he explained, I think it's a little bit different, but basically he was saying that if at any given time one person would pay you less than what you bought the baseball cards for, I think that's what he's trying to get at. But it's a really screwed up accounting system if you think about it, because nothing else is accounted that way. If you guys are accountants, you could chime in, but as far as I understand, that's the only thing that has this really weird accounting. So he was talking about optics. If you're a CFO, that may throw you off because you don't want to show a negative on your P&L when you're reporting your quarterly, right? So I'm gonna let him continue.
Fund, and it would be a security, but then there are complications with companies owning large amounts of securities, something called the SEC 40 Act. And if you have more than 40% of your tangible assets as a security, then you become a financial entity and you trip that act. So the accounting is a challenge for publicly traded companies. It's not a problem for high net worth individuals or private institutions or macro hedge funds because they've got different situation. And so what you probably find is the most aggressive institutions, they won't be publicly traded companies. They will be someone that was going to buy $10 billion worth of gold and silver or $1 billion worth of gold. And I'll think, I'll just sell the gold and I'll buy Bitcoin, right? If I'm changing the macro trade. And I think over time, the accounting profession will review this. There's an awareness amongst regulators. This is an issue. Tom Emmers, who's a congressman in the US, wrote a letter to the head of FASB saying, and it was signed by 6 other congressmen, saying you should really take up the issue of digital asset accounting because, if one company owns 10 billion worth of Bitcoin and one company owns 500 million worth of Bitcoin, they both look the same on your GAAP statement. If they both bought it at 500 million and it traded at 500 million. So So it's not in the best interest, I think, of the investors or the companies, but it's a pretty bright line. It is what it is. That's what the accounting rules say.
All right, so that's it. So, like I said, you probably have not heard him say that before, right? That's a real legitimate reason. Um, Besides speculation, oh, why doesn't public trade companies, why doesn't more come in, right? I think that's the reason. That's the reason, because accounting for at least public trade companies, it sucks when it comes to Bitcoin. They're taking a risk to their P&L, because if they buy Bitcoin and it suddenly drops below their price, it's going to make their quarterly look bad. And a lot of projects, or a lot of companies, I should say, probably do not want to risk that. However, that's public trade company, so that is being obviously worked on. But for everyone else, you mentioned all the family offices and the hedge funds, right? The investment companies, they're a little bit different, because they want to buy Bitcoin and put it into funds, which is why you're hearing everyone like Fidelity and ARK and even Guggenheim, even though they're spreading a lot of FUD, JP Morgan, everyone else is trying to put Bitcoin into a fund, right? So I think they can bypass this kind of accounting stuff. So I think that's legit. There's something that's not, it's not speculation. It's not hopium. It's just that the accounting aspect sucks right now. But one day it'll get fixed. Anyways, I put this interview in the description for those of you guys that want to watch the whole thing, of over an hour long. I think by far this is the best interview because of the questions, because the questions are different. It's not the same stuff like, what's your outlook on Bitcoin? Why do you continue to buy Bitcoin, and so forth? It's different type of questions, and something that I was curious about, he answered. At the very end, he talks about Saylor.org, which is his free education, his university for free for all, right? And he said, when I pass away, I'm gonna leave my fortune to the university, and it will operate as a free university pretty much, indefinitely. So that was actually a question I was gonna ask him, and he just voluntarily, suggested it. So that kind of sucks, but it makes a whole lot of sense. If you're a billionaire and if Bitcoin goes to 1 million someday and he becomes a trillionaire, what are you going to do with all that money, right? So most likely you go do it, you go give it away, humanitarian reasons. Maybe you go to space like the other billionaires. Or you fund a private, or a public, I should say, university, and give free education for all. I say that's a pretty good cause. All right, guys. So that's this interview. Now, what else is going on? There's really not much to say. Bitcoin and altcoins are still stuck within this range. And I know people are, again, freaking out because it's showing some weakness, 32.5. But, if you zoom out, you just notice that, we're still stuck in here. Obviously, we have hit the bottom of, this, I guess, just channel between 41 and 31, right? So it's kind of stuck in here, and we just have to wait. I've been thinking maybe I'll create this other video, or I could just say it here, because honestly, I don't know if this is a good topic for another video, right? A lot of people are turning bearish. I realize that. And not just people, not just you guys, not just investors, not retail investors, a lot of influencers now, a lot of YouTubers, a lot of Twitter influencers or whatever. They're all getting bearish. They're all feeling the pressure, because you know what? During hardships is when you see the true colors of people. Okay. During 2018, 19, 20, a lot of people left. A lot of people stopped. They didn't believe in themselves, right? There were times I got to admit, I almost stopped because, I got banned from YouTube and so forth. It was not a good time, right? But I continue forward, not only for you guys, but really also for myself too, because I'm like, you know what? Once we get through this hardship, we're going to come out on top, right? And that has happened. ever since 2020, that's what we've been seeing, from 3,800 all the way to where it is now, right? So there's a lot of people, again, that's turning very bullish. I mean, very bearish, because Bitcoin has not moved for 2 months. So now people are like all in a frenzy, losing faith. They're trying to blame others, and they possibly will get out, right? But I will stay here. And here's the thing. A lot of people that turn bearish is making some predictions that Bitcoin will fall. It'll go down. It'll go down 31,000 to 20,000. All right, or maybe it goes even below 20,000 or whatever, right? But these guys that are telling this, screaming this from the top of their lungs, right? What are they doing? That's the thing. So what are your choices? If you really believe that, if you really believe, well, Bitcoin is for sure go drop, right? So what should you do? What should you do, right? There's 3 things you could do. One is you continue to hodl. And that's it. You just ignore it. You continue to hodl. That's one. Number 2 is you could panic sell. So you could just sell right now and take your losses and say, hey, I think I'll buy back later. You could do that. Or 3, you just do nothing, which is more like number 1, hodl, and then you DCA, right? So actually, if you look at it, there's only 2 options, but it's really 2 options plus 1. So it depends on what happens when things go down, right? So you have to look at it that way. If you really believe that things are going to get worse and possibly get even really, really bad, and if you believe that, then what should you do? Well, then the clear choice is, if you can't stand it, you can't stand the volatility, or you need the money, or you honestly 100% believe that things are going to get much worse, well, then I think you have your answer, right? I think you have your answer. Then you should sell and take your money out and possibly not come back in again, because it's just a little bit too much, or it's the wrong timing for many reasons. I don't even want to, shame you for doing that. You have to make your own decisions, right? And that may be the right choice for you. But for everyone else, I think the smarter, at least people that are investing for long term, I think the smarter play is to continue to hold, get cash ready on the side, so that if things go down, right, you're able to DCA. That is what I'm doing. Hopefully that's what a lot of people are doing, because I think that's the smarter move. Because you don't know if things are going to go down. And if they do, you don't know how fast they'll recover. And if you're trying to take advantage and you can't, well, then that sucks, right? So obviously, if you have cash on hand, that's going to help you, right? So that's I guess, to sum up, you basically have 2 options, right? You hold, and you continue holding, right? Or you can just sell and leave. That's really it. There's no like 10 different options. And then it's just a matter of, if it does come down, what do you do? Do you stay out, or do you dollar cost average in, right? So that's really all there is. So I feel like there's too many people out there that's throwing just throwing FUD out there and saying, hey, it's going to crash and this and that and blah, blah. But what are they doing? And what are they suggesting? A whole lot of people just throwing FUD and just saying, okay, I was right. And that's it. It's like, okay, you can make 1 million predictions and maybe half of them are right. But, what are you suggesting? What is there to do? What's the game plan? There's none. Just people just throwing FUD out there, right? So that's really the thing. That's why I like Michael Saylor. I like what he's doing. I've been through it a couple of times, right? I made many, many mistakes, and I'm following through. So I continue to hodl. I continue to make sure I have cash on hand, so I could dollar cost average when things come down, right? And that is what I suggest. Now, many people, like the type of traders, like speculators and actual traders, they may argue that's stupid, that, I don't have anything in the market. I'm going to wait until things come down before I buy, and they could do that, and they can sound really smart. But you take a risk of missing out on the big bounce, or missing out on some recovery gains, or missing out on the fact that, we don't go down at all and we start recovering up, right? Because honestly, I still think it's way too hard to time top or bottom. And there's many external factors at play too, right? So yeah, there you go. I know I rambled on a little bit. Hopefully that made some sense, right? So I'm going to continue on. I'm going to continue on with what I'm doing, and I'm going to suggest basically the best course of action, at least if you plan on staying in the game, investing, and holding long term. I feel like this is the best message I could give out, right? But if you're not in it for that, you just can't do it. Maybe you invested more than what you could afford to invest to begin with, more than what you could afford to lose to begin with, or you're a speculator, you're expecting things to come right back up right away, or you're a trader. I mean, you may have a different course of action, right? So that's it. That's all I just want to say. All right, now I'm scrolling up. Let's do some Q&A. Maybe I missed some stuff. Brian at the very top says, after 60 days of this, you can't just say it's FUD anymore. Sure I can, because we have been down for much longer periods. Much longer periods. There has been periods where it was basically down for 6 months plus. So yes, it can happen. And yes, even during 2017, there has been periods where it's like 2 months where it's just basically going sideways. So, and I do anticipate, and I've said this before. And by the way, I think people misunderstood what FUD means. FUD just means there's fear, uncertainty, and doubt. Does not mean that it's false. I think people interchange the two. So people like Brian just said, you can't say it's just FUD. Meaning like you can't just say it's false. No, I mean, there is fear, uncertainty, and doubt. This is why we're here. Right? So of course, there's been many times in the past where this has happened before. I mean, it just happens. And just like with any kind of investments, you have to wait. You have to be patient. It's a patience game. People that are more patient win the most. That's how it is. The more patient you are, the more you win. I know I hate to use like Warren Buffett as example since he hates Bitcoin, but if you look at his net worth throughout his career, he didn't become a billionaire until like 50. Like at the very early stages, he was not that wealthy. And after he turned a billionaire, like at the age of 50, then it started accelerating really, really quick. But his investments have been over decades upon decades. So those that are the most patient, they make the most. All right. Anyways, moving down. Teddy, I did for 3 months, probably the biggest, because back then all the YouTubers were getting banned because during COVID, YouTube relied a lot on machine learning and stuff, and back then crypto was deemed like ultra bad. So I got caught in that, but the strange thing, all these other channels got them back. And mine took forever. So I had to stream on Twitch and Periscope and D-Live and Facebook Live. It took me a long time to get back. And that really like killed my motivation afterwards. But I'm like, I got to focus on the future. Things will get better. Things will come back. And they did. Matt says, isn't BTC pretty much... no. Isn't BTC playing out pretty much like a lot of people predicted in May based on Wyckoff? But Wyckoff is not... Yes and no. You could say that, yes, it came down because of Wyckoff. But if you look at the patterns now, the 4-hour daily, it doesn't follow anymore. So does that mean it followed Wyckoff at all? It could have been just one gigantic coincidence, right? So it could have been just a line because Bitcoin was hot. It could have been because of Elon's tweet that popped the mini bubble that we were in. It could be because this whole ESG thing that came out, and of course the Bitcoin miners, right? There's a lot of stuff that happened in May, so it's really hard to just say Wyckoff, right? Like it's following Wyckoff. So there you go. Gaming for life. Thoughts on Kyber Network long-term and price? I think Kyber Network is trying to redo themselves. You know, they were always like a pretty fancy DEX, but now they want to become more like an AMM because AMMs are the hot thing. So I think they're okay. They've been hovering for a while. If they make a transition, they could do fine. Peachtree Gaming says fundamental hasn't changed, only better. I've said that. That's 100% right. I've said that for a long time. What we're seeing right now in 2021, you know, if you're paying attention to what has happened with adoption and with awareness, with usage, with anything you could track, number of addresses and number of dApps, I mean, anything that's a metric that you can track and everything else that's going on. I mean, the fundamentals is so much better than all previous years. I would argue than all previous years combined. That's how good it has been in 2021. So I definitely agree with that. Pojak says, Saylor says essentially the same thing in his interviews. If you challenge him, he gets defensive. Ask Ben. You know what? I find that Ben interview, I thought it was bad, but I think we don't know the context of that. So I still didn't find a tweet, but Ben was saying he was being, he was arguing against Michael, and I don't know what about. I never saw it. Right, so Michael coming onto the show, first of all, I think he was being defensive because he was trying to protect himself and he didn't know who Ben was. And second of all, I honestly didn't think that he respected Ben. Maybe he was in a bad day or a bad mood, but you could tell right off the bat he was just very defensive, right? But I think this last interview proved that it really comes down to the questions. Because I honestly think this last question from Jamie or Jamie Tree, I put the link in the description. I think if you listen to his answers, I mean, he was just in a much calmer, more natural mood, and he answered brilliantly. And there was a lot of questions asked that was never asked before, the ones I showed you guys, right? So I actually really, really, really enjoyed this interview. So, of course, you guys know I'm trying to get him on the channel. If I do, I'm going to ask him those kind of questions. I don't know what yet. I had a few, but I think it really depends. I mean, you think about it, if you're in his position, you know, you go on like 20 different interviews, you get asked the same question over and over and over again. He gets tired. It's just boring, right? And, you know, I think it just comes down to asking the right questions. Based on Wyckoff, how low can BTC go for the next few weeks? Based on Wyckoff, we already hit bottom. The spring action for Wyckoff is bottom, and that was 28,000, right? And then the next few steps was just like up and up and up, and we've been forming higher bottoms. But then recently, this kind of invalidated because it was showing once we get out of that, I think we're going to phase D or something, it should have come above 41,000 already, and it hasn't. So I think this last week or so has basically invalidated Wyckoff. So we'll see. We'll see. I mean, who knows? It could turn right back up. But, you know, the whole thing about Wyckoff, why I even brought it up, because I always thought, like, it was silly to bring up. But the thing is, why does Wyckoff exist? It's manipulation. The big boys are manipulating the market to get in cheap. And that's something else I've been saying for a long time. All these banks, they spread the FUD, right? about doomsday, about no interest and this and that. Why are they really doing it? Do they really care about your best interest, or do they care about their best interest, right? So ultimately, it's some form of that. Whether or not it's truly Wyckoff and following the same accumulation pattern or some other pattern that hasn't been detected, right? Ultimately, what does that mean? It means that they want to accumulate. They want to accumulate as much as they can. I mean, that's what it means, right? So you don't want to fall for it. That's really that simple, right? Dope. Appreciate that. Joey, appreciate that. Steve says Ada will change your wife change your wealth. My question is, what is happening in Binance? Do you think it will affect their tokens as well? Should we be worried about? I mean, Binance is going through some pains right now. A lot of regulations, I guess, or talks about regulations, although nothing really has happened. That FCA group or whatever financial group in UK, they didn't really do anything, right? But because of it, some banks like Barclays and I heard some other one was disallowing their customers from buying crypto from Binance. So there's some rumblings going on, but it may be short term. It does affect BNB a little bit, but it's really unlikely. BNB is as high as it is because of usage on Binance Smart Chain and also all the DeFi projects and the stakers. I mean, their whole ecosystem is so vast. So right now there might be some regulatory uncertainty. Maybe it causes them short-term pain, but I'm not even seeing it. But I think they're going to get through. I mean, CZ is not a stupid person. He built up Binance to be what it is today. So I think they'll get through it. They'll get through it. Jer, I love your channel, but sometimes I secretly wish you were wrong about incoming recovery so I could get more cheap ADA. I could be 100% wrong. I could be 100% wrong, and everything dives even more. And it has happened before. But the one thing that I know is Bitcoin and the good altcoins, they will come back, right? No matter how far they go, because this is the future. This is the future, and based on the fundamentals, based on external factors and everything I've said, it doesn't matter. It doesn't matter. Short term, there may be a lot of volatility, but long term, it's heading much higher. Chef, what do you think about the RW token pre-sale you mentioned this morning? I think the main project, my crypto wallet or my crypto, I forgot the site. I think this is my crypto sale or my crypto wallet, the one for WordPress integration. I think that was more interesting to me than a reward token, but who knows? Maybe they could leverage that and do really well. So they would be basically competing directly with StormX. Vincent, thanks. You help us get through hard times, and we become better traders on all types of investments, even in our business. Believe in it, buy the dip. Thank you. I appreciate that. I enjoy you taking on tougher questions from critics rather than random tokens. Cheers, Jax. I appreciate that. Something got deleted. Super chat got deleted. Jordan gave you a shout out. Both good channels. I like Jordan as much as I troll on his channel, and sometimes I'm just joshing with him, but I think overall he's a good guy. I mean, I could tell when I tune in his streams. He's trying to do his best to encourage people by showing the charts, but overall, I think the message is the same, right? You focus on long term. Short term, there could be volatility. Long term, you're in it for life-changing wealth, right? For long-term investment. Rab, thank you for that. Thoughts on EOS and Bullish going public? I did not hear about EOS going public. I don't know why they want to. They have such a large bank. They collected $4 billion in their ICO, and that only appreciated because they collected mostly in Bitcoin. So, I mean, their treasury should be enormous. So I don't know what you're talking about. Hopefully they're not trying to go IPO. What is the actual purpose of there being an OTC market? Doesn't it sound unlawful that people can make large Bitcoin purchases without affecting the market? Yes and no. Yes and no. I mean, I think stock traders can tell you better, but OTC market, it's just a market for large whales to do transactions. With crypto, it's around. I don't know if it's unlawful, but anyone that wants to buy a large amount, this is what they do, right? So I don't know. I can't really give you a good answer on that. Aztec Finish, if the market cap is 1.4 trillion and next day is 1.3 trillion, does that mean people have pulled 100 billion out, or is it the total value of the coins have gone down for some reason? Yes. They've gone down because people have sold. That's really it. People have sold. Michael Saylor's anti-diversification. I do wish Michael admitted that he has other investments, but the one in Ben's interview came off like you should only buy Bitcoin, right? But the one I just showed you guys, he talks about it. He even says it. If you have no money at all, you should create a business, or you should invest in a project that's equivalent to, say, a dApp, because the risk is higher, but the potential of going up is higher too. But then he's like, well, if you have a little bit more money, then you go with the big cap, something that could support the dApp, something like Ethereum, Cardano, Solana, VeChain, something like that, right? And then he's like, if you have a whole bunch of money, then of course you just go with Bitcoin. So it makes a whole lot of sense. He even breaks it down, and I know that he has more than just Bitcoin in his portfolio. I mean, the guy made hundreds of millions from tech stocks. You think he'd just go sell it all for Bitcoin? I think not. I think he did play a little bit too defensive with his interview with Ben. So if he comes on his show, I'm going to press him more on that. I do think eventually he's going to admit that he owns Ethereum and some of these others too. All right. What do you think about Axis Infinity? You get paid playing games. I mean, it's a very popular game, but I think it's a little bit too overhyped. It has jumped up way too fast, so be careful. But it proves that games work. We have seen it time and time again, right? Farmville took off because it's a game, very popular. People got hooked with Facebook, right? And then we moved into mobile games. There's just games work. When you hook on people, they just stay with it. And if you mix in NFTs, then of course that's going to help even more. So it could keep going, but trends change, games change all the time. What else is there? Kevla, hey George, been watching your video with Altcoin Daily on ETH. Great stuff. Thank you. Do you recommend a portfolio tracker better than Coin Tracker? Kind of difficult to track average buy in coin. I use Delta. I've been using Delta forever. It's an app that you can get. There's no desktop version. It's just a mobile version, but they do very well tracking your coins over time and among other things. But check it out if you haven't yet. All right, last few questions. Know someone working EOS. They have more BTC than Saylor and A-Line combined. I don't know if that's true. I mean, Bitcoin Treasury actually breaks it down. So I don't know if that's actually true. Block 1 has 140,000 Bitcoins. So that's more than Saylor. I don't know about A-Line. If you combine the two, 147, it's pretty close. I mean, okay, let's just say you're right. Pretty close. Even if they exceed them, yeah. This is why I said EOS has unlimited bank, because they had such a big ICO and it was all collected in Bitcoin. So they're going to be around forever unless they really, 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 really mismanage their funds. No, Jordan, I have not watched that scam, so no. Ontology, I don't know too much about Ontology these days. You know, they're like a ID chain, really close to Neo, but I don't know if they have done anything recently, so. All right, that's pretty much it. Overall, guys, you know how I feel. Long-term holder, I'm going to ignore the volatility. I'm going to help you guys do so, right? But I think this interview is a really good one. If you guys haven't watched it, make sure you do so. Some really good questions. And I love Michael Saylor's explanation of why public trade companies are not getting in more because of accounting, and also the 4 types of crypto and the 4 types of investors. So you have to decide what type of crypto that you should be involved with and what type of investor that what type of investor you are. So really, I think that's what it comes down to. All right, guys, that's pretty much it. Bojack says DCA into 401k stocks or DCA into Bitcoin. Choose one. I would go with Bitcoin. All right, have a good one, guys. Have a good night. I'll see you guys tomorrow, 11:30 a.m. Central Standard Time. All right, have a good one.